what trading is all about. It was not actually taken by me, but I came up and summarized it, what trading is all about. Then and the class was basically focusing on FX. Okay, so we have our own definition of trading FX. Our definition is simple: trading um, strong currency against weak currency. Just take note of that. If you understand this thing, if you understand our concept of defining FX, that's forex trading, then you'll be able to build a strong strategy. Our own definition of FX is trading weak, strong currency against the weak one. Some people will say trading global financial market, trading for buying a single currency. No, you could buy currency and lose. But the easiest way to buy and gain is when you trade the weak, when you use the strong one and trade on the weak one, then you gain. So on that definition, we try to give our client insight. The first thing they should be looking at for is, how do I know currency that is weak? How do I know currency that is strong? Or how do I know when a currency will go weak? How do I know when it will go strong? Then with that information, if we're able to establish that to you, you can understand properly how to trade. Because obviously everybody know what is foreign exchange. It's not anything to define. But how to make money through it is the most important thing which you paid for. So giving you the general definition doesn't make sense. So we have to give you a critical definition that our definition can define your strategy. Do you understand? So we now like establish further talking about how it is done. We discussed that it is done in pairs. You know that it comes together, one pair and another, they match together. It means one weak, one strong. So as they are together, let's say euro and dollar. So if euro is weak, dollar will take over. So if dollar is weak, then the euro will take over. Because assuming you are dealing on them, you be buying one against another or selling one against another, and you make a profit from the fluctuation in price. Do you understand? So that was our definition. Then we bring it down to other terms. People need to understand about price, change in price, which is called PIP. We'll talk about leverage, what is used in trading, because in the bureau de change structure of trading, you have to use your physical currency to go to the market or to a bureau de change operator and buy um, uh, a particular currency. It could be euro, it could be pounds, it could be anything, it could be any country you are going to. So now on that kind of structure is called spot FS. So you buy it at a spot without a leverage. You could have it $10,000 of your money. Instantly, they exchange the 10,000 to another currency. That's also FS. So they make exchange it, you may get higher of that currency exchange, or you get lesser. Am I wrong? Then I hope I'm not wrong. Then but now look at what happened. You may have used big money to exchange it, but on the trading on the global financial market, it's not bureau de change, and it's not done. It's actually done on over the counter OTC, but on digital level, or some over the counters are also bank, and you trade only top instrument. And because of that, you're not looking for a buyer, you're not looking for a seller. You're actually playing on the price movement, and your profit or loss also reflect into cash value. Now, digitally, when you manually, when you trade on road change, you know that, let's say you have Nigerian money of 1 million, you exchange it to dollar, you get a different figure, right? So if you exchange it immediately back to naira, do you know that you may not get exact 1 million, you may get higher or lesser? Do you know that? So if that happen, that is change in price. So the change in price just occurred, and many things can influence that change in price. It could be the economic structure. It could be economic strength of the currency, the naira or the dollar you just traded with, or it could be charges like the buying price and your selling price, because it can't be the same. So the change in price determines your profit or loss. That's also how it is done on digital level. When the price change, it could change to your own advantage. When the price change, it can also change to your own disadvantage. That's trading. So it's actually a complex industry for beginners, because it has a lot of speculative um, event that affect it, and it has a lot of fundamentals that affect it. So if you're a currency trader, you need to get used to. We'll teach you about 10, minimum 10 FS fundamentals that you will need to know to be able to be a profitable trader. And not just teaching you, we teach you how to apply them, because obviously we are all educated. We could go and read about them and know them. Some of us actually know them. Do me say you're an accountant, obviously you know some of, event about currencies and everything. But now, application of them is why here. I don't know if I'm wrong. Then they will also teach you some technicalities you need to understand and how to apply it. That's on the side of FX. Then on the side of other market flow with trade, such as treasury, equity, futures, and commodities, it's not the same definition, because they are not traded in pairs. They are just a single item. It's either it's going up or it's coming down. And they have, some of them have a very maybe single defined analysis, or single defined fundamentals. So it's not really as broad as when you're trying to define FX. But FX has the one of the majority of trading volume in the world, because everybody uses currency, so it generates more volume. That's why it become a household name. Many people talk about it more than every other instrument. But as we progress, you may see that it's not only that we will be able to talk about. Then we now narrow down to setting up account, which Tomitobe did. We set up account uh, as of last week. So this week we'll be able to further up from where we set up the account and give you further introduction to the business, talking about other things, how to understand the platform, until we're able to give you access to how to make your first trade. Then we also discussed analysis with okay, we also discussed training structure with our client, that our training is trading. It means as we're teaching you, you'll be training together with us, which will help you to, grow. Because this is not like normal education where you just come and get certificate and go and begin to different job. You came to get established, and you came to get an established knowledge, which you can even use to build a company tomorrow. So it's easier for you to understand what we're doing if you are into practical aspect of it at the same time with us. So when we are buying, you are buying. When you are selling, you are selling. And you could have a practice account, you can have a real account, you can have any type of account that you want, which is not restricted by us. You have to choose with any broker of your choice. If you want to choose those broker we use, fine. You're also allowed to choose them. The only difference between practice account or demo account or other type of account is that sometimes it can withdraw the profit you made. Now, we also have a structure, because we have a target. Each of our students, our goal is to make sure they make profit. So we built a system that also allow them to make profit. Like in trading industry, I just had the event. We have automation. We have different kind of platforms that is very more highly regulated, which you can use like AI trading algorithm and all of that. You can be able to leverage on them and make a decent amount of income while you are still trading. So as you are learning, you have another portfolio that's being done on automation or AI or algorithm. And if it's effectively doing well, you'll be making money. Which one of them is the one that we had the event for. about 30 minutes ago. That was what we discussed last week. So that was what Tomitobo picked interest, and she was able to set up a portfolio. And also we have reviewed our policy. People who are teaching this time around, we don't allow them to trade a certain amount of money by themselves because they are beginners. Rather, we put them on a system that we believe will work better for them while they are still learning. They could be trading maybe a lower account, while the bigger account is being traded on AI or automation or hybrid, where they'll be making more profit and they'll be happy, and we will be happy that the people we are teaching are making money, because the more you make money, the more we stay in the business. If you come in and lose money, there's no glory in it. We still soon close the business because you may even stop learning. You not even ask somebody to join because you lose money. Our own is to guide you to make sure you are able to understand how to trade, understand the practical aspect of it, trade together with us to even confirm by yourself if you are actually trading or not. So you see by yourself, see how we trade, they will now help you build a strategy. So within 6 months' time or 1 month time, you can 6 months time or 1 month time, based on your capacity, you can be able to build a strategy with us and able to maximize the use of our services. Yeah. So let me know if you have any question in regard to that.
No question.
Okay. So have you been able to set up an account? So can we set up that so that let everybody be on the same page before we continue?
Okay. Okay.
Yeah, because Tomitobe have set up an account. Tomitobe, have you set up your own trading account as well? The one individually want to trade.
Yeah, I set up my GFT account.
Okay, you know, GFT, they have a new policy, as you can see. Were you in the event this morning?
I joined late, very late.
Okay, so join late. So they won't allow you to trade or on the account open for you, because it's against their policy. But if you open it on Ava, then you can trade it. Because if they allow you access to trade it by yourself directly, with that you'll be being a portfolio manager, or like directly under them, it will not look as if they're offering you brokerage.
Okay.
Okay.
Do you understand? Yeah, we were doing it before. We're trying to talk to them to allow our client, trade on them, because it's easy to register with them, as I can see. But they said it should conflict both their condition with MT5 and the condition with their prime partners. So it's better that you open your own personal account, the one you'll be using directly by yourself, verify that one, complete it, and this one that will run on GFT will be different. Do you understand?
Okay, I attended today's session, and I know I tried to open an account on AvaTrade, which I have done. I've not done anything on GFT.
Okay. So has it been verified?
Okay, I have to check if it has been verified.
You submitted the document, right?
No, I've not submitted any document yet. I'm yet to submit any documents.
It can't be verified because you have not submitted any document.
Okay, okay then.
Yeah. Because the verification is when you have submitted document, then they now verify you.
Okay.
Yeah.
Okay, so when I tried opening the Ava account last week, it took me to MT5 platform, where it redirected me to my Google Play Store, where I downloaded the app. Am I on course? Am I on track?
Yeah. It's on track because of the way the system is structured. Is user friendly. If you open the account, it will take you automatically. It will take you automatically to the platform, so where you can be able to do everything together. So you're actually on track with them, but sometimes you have to be careful so that you can also be able to close, maybe to minimize it or browse around the platform to see where you can upload your document, or, other things, so that you won't just go in and start buying and selling without you knowing much. Although that's actually why we are here. If you it will get to the point that we can allow you to share your screen. When you share your screen with us, we'll be able to see what you are doing and how we can help. So
Okay.
for me say that she has opened an account. I want to believe that that you are on this stage. Are you on this stage, Bumi?
Yes.
Okay, so you could see something like this, right?
Yeah, I could see something like that.
Okay. So today we will continue from where we stop.
Okay.
What we're going to discuss, that yesterday, last week on is recorded, so we can send it to you. You can go and watch it. Yeah. So we will discuss with you today platform analysis. Platform analysis. How to analyze the platform. You see this platform, you see that there's a lot of complex let's say complex images you can see. Sometimes you may not be able to understand it properly. So we will take our time to analyze it for you so that you can be able to understand how it works. Now, I told you about diffusion of trading, that it is done in pairs. Look at the pairs I'm talking about. So when you go in here, you see something like this. You see something like euro and dollar. You see something like Britain pound and dollar. You see something like Australia. You see something like JPY. You see something like AUD. You see something like NZD. You see something like JPP. Did you see that on your own, Bumi and Tommy Tobe? Did you see something like this?
I've seen, yeah, I saw something like that.
Now, all this is what is called currency pairs. It's paired.
Okay.
Yeah. Now, you see that they are in two, like two currency coming together. So why? Because in the global market, it has already been fixed. You're not looking for a currency to buy, a currency to sell. You're rather looking for a pair to trade on. Then when you check this chart now, you see that there are green charts, there is a orange chart. Can you see these things?
Okay.
We
Yeah.
have green chart, yeah. It's also a sign of different kind of instrument, rising chart and falling chart. Because of we have each of these currencies has two pair. So now when you see green and red, some of the platform can give you black and white, some can give you green and white, depending. I mean, it can't just be one color, there will be different color. So all this entirely now is called chart. They are all chart. I mean, indicating the movement of the market, how it has been performing. Do you understand? So when it's forming the green one, it means that the price is going up. And from here, you see here now is the current price of this particular instrument you're watching. It means this particular instrument now is trading at 79.70. And this particular place here, you see this candlestick here, this one now is the current candlestick. Basically, this chart is called candlestick because they look like candles. There are other platform who have line chart. That one look like a lion. It's basically used by those economists that used to draw supply and demand curve. They use line chart to draw it. I don't know whether you are aware of that, but in the trading industry, chart like this is most commonly used. It's most commonly used. Then when the price is going up, the green one will be forming, and it will be forming together with the price. When the price is falling, the red one will be forming, and it will be falling together with the price. Let me know if there's any example of a falling market. For example, look at the example here, Euro US. You see that it is bullish. Sorry, it is bearish. I think you know what is bullish and bearish.
You just summarize, give us an explanation on that, please. Bullish and bearish.
So in economics, bull and bears. Bull is like something that is rising. Bears means something that's falling. So
Okay.
now you see that this chart has green and yellow. So anytime you see, or let's say red, anytime you see the red one falling, it's a sign of bearish, that the price of this pair is falling, and it will also be falling together with the current price. You see that this price will be dropping drastically. Do you understand? The price will be dropping drastically, and because the chart will also be dropped. So basically, the chart goes together with the price, not price goes together with the chart. The price goes together with the chart, not the chart. Sorry, the chart goes together with the price, not the price going together with the chart. Because chart is just technical. So what is life is this chart. That's why if you check your phone on Google, check the price of euro and dollar now. Then you could see the price. Maybe I don't know whether you could do the analysis now. Check euro versus dollar price, or euro to dollar. I'll give you an assignment, please.
Okay.
Can you check me the price of euro to dollar?
€1 to the 1.09.
Well, then what are you seeing here?
Okay. Yeah. 1.092.
So where do you get your data from? Is it on Google?
Yes, on Google.
So now is the Google, does it have a chart like this? It doesn't have. No, it does not have. Google doesn't have a chart like. Now it does say that what you're trading is global price. So price controls the chart, not chart controlling the price. Do you understand? Because most people come to the platform thinking that everything ends here. So if you check even on TV now, check the current price there, like maybe Channel TV or CNN, it will also give 1.09. But the remaining this is like the decimal point of it, there's always other ratios. Yeah. But it means now for you to get €1, you pay $1.09.
Okay.
Do you understand? You pay $1.09. So on a global trading now, you're trading this thing now based on stock value. So, and it means also for you to trade on it, let's say now you place a buy on it, then, and the price move to to 1.0 to 1.10, 1.11, 1.12. It means it's going up, then you'll be making profit. Then if you place a sell and the price drop to like this is 1.09, 1.08, 1.06, 1.0, you know, keep dropping, you'll be making profit. You will lose when you place a sell and it's going up, or when you place a buy and it's coming down. Do you understand?
Please, could you come again?
As the price
Please
is
come again, sir.
1.09,
It's
as the
confusing.
price, yeah, as the price is 1.09, for example, you will make profit if you place a buy and the price moves from 1.09 to 1.10, 1.11, 1.12, 1.13. You know, it's going up. Do you understand?
Okay.
Then you'll be making profit. As you can see, it's going up. You'll be making profit because you place a buy. Let's say you bought at this price, you bought at 1.09, and the price moved to 1.10, 1.11, 1.12. Obviously, you're making profit. Do you understand? So now, if you place a sell and the price drop from 1.09 to 1.08, 1.07, 1.06, 1.05, 1.04, you'll be making profit. You'll be having losses if you virtually place a buy and the price dropped. You bought an item to sell, only for you to get home, the price of that item has dropped. You lose money because you obviously bought it 100,000 and you to sell it. Do you understand? So you reach your house or to your shop to put that thing up for sale, discover that the price has dropped. You're obviously going to lose money because the price of that item has dropped. Do you understand now?
Okay.
Then, but you bought it at 100,000. When you go home to your shop to display it, it's got that the price has gone to 130, 150. You're making profit. I don't understand, because you have chance of selling it off and make money. Or however, that is spot. We are using that scenario to interpret trading, where you trade on margin, where every movement count on your account. So you could see how the movement moves from 1.09, 1.011, 1.012. You'll be making more profit because you bought at 1.09. Do you understand?
Yes.
Then, assuming you place a sell and the price dropped, sell is not withdrawing off your money. Is to, because in trading you could have a sell position, you could have a buy position. It is called going long and going short. That is the terminology. So when you place a sell and the price dropped from 1.09 to 1.08, 1.07, 1.06, 1.04, you also be making profit because you place a sell at a higher price and the price dropped. It's similar on spot. You go to a shop. Okay, somebody came to your market, to your shop to buy an iPhone or an item. Let's say this eyeglass, came to buy this eyeglass, and you sold it at 100,000 to him. Do you understand? You sold it at 100,000 to him. And now the price eventually dropped after 1 week to 70,000. That is the retail price, and obviously not the wholesale price.